let me get this on airplane mode there.
Yeah, I gotta put mine off too.
Airplane mode, it won't ring anyway. So
No.
So just in case.
Let me see here. Silence.
I just did one with Ray McKinnon. On
Manimal.
Yeah,
Yeah. How was that?
it was good.
That was more martial arts based, I would imagine.
Yeah, pretty well, and he's just easy going with it, right? He's just had some fun with his. So
Sorry, I just gotta double check that I
Yeah.
get everything running because I've messed up a couple times.
oh man, you got all the gear. I was wondering how you did that. I thought you might have been doing this in your Airbnb studio.
Well,
That's what I was calling it.
originally I thought about it, but fortunately it's been full.
Yeah.
You know, we got a gal in there. You know, funny when I was telling you about the Airbnb restrictions, had like my last Airbnb booking, like she booked it for like mid-September for a couple weeks. And then I got a call and she was like, hey, it's your Airbnb tenant that just booked. I was like, oh, hey, what's up? And she's like, oh, well, you know, I booked it for 2 weeks, but I actually need it for quite a bit longer. She's like, would you be willing to do like a deal off, like just like do a lease agreement? Because, you know, we have friends that have cottages and stuff. And sometimes if we're staying at their places, they kind of let us kind of, you know, save their fees and all that crap. And I was like, oh, yeah, well, how long do you need it for? She's like, well, actually, I'd like to get in there like September 1 till like the new year. Like,
Okay.
And I was like, oh. So she's like, yeah, would you be able to like help me out? So I give her a little bit of a deal.
Yeah.
It is the shoulder season, we'll call it, like outside of the travel season. So you're not getting a ton of that people coming to Halifax for a week or 2 weeks or a couple days or whatever. And, you know, to be honest, like it's much more manageable if somebody's in there for like a month or 2 months or 3 months. And to be honest, when we got it set up, we thought it'd be a lot more, you know, chunks of days.
Yeah.
But man, we barely had it up. And we put it up just before the new year in 2022 because we finished in November. So we had a few dribs and drabs, like a couple days here, a couple days there. You know, you don't get that much traction until you get a few reviews.
Yeah.
Kind of bumps you in the search, I think, a little bit. But man, we come March, some guy from a concrete company and bridge construction, he booked it from like March to May, 2 months. Boom.
Oh, shoot.
And I mean, you know, it's just a 250 square foot. It's like a bachelor. It's like, you know, it's not big. But I mean, jumping, if I had to live somewhere and I was
Why
just
not?
a single guy, like, you know how busy we are.
Yeah.
I'm in and out. I'm just looking to lie down, watch TV for a half an hour before bed and get after it. Because, you know, between our hobbies and our work, we're pretty well full tilt. And you got a family and I got a couple dogs. And, you know, so...
it's busy for sure, right? So,
yeah, it's definitely busy. So, yeah, man, it's been like, although the short-term kind of regulations that they're clamping down on are, I'm not happy about them because to me, it's like, well, you release this program where there was no stipulations. You just had to apply to see if you were allowed to do the secondary suite or the attached nanny. We didn't take no money. There was no money being given out. We just went for it because we wanted to invest. And that was kind of always my goal before even thinking about becoming an agent.
Yeah.
It was like, oh, well, maybe, you know, I got a corporate job. I do pretty well. My wife does well. Maybe we'll look at investing. And that'll be my in to the real estate market. And then, you know, things changed. And I dove headfirst into the real estate sales. And then we're like, well, you know, why don't we just start here? Because my wife's very frugal and very, very much more risk averse than I am.
Yeah.
So
there's always one in the relationship.
Yeah.
Like that, right?
Well, I'll go and like, you know, I'd just run through the wall and get, you know, worry about it later. Like she's more whoa. And I need that. Otherwise, you know, hard to say where I'd end up. You know, could be good, could be bad, could be a bit of both.
Yeah.
But no, it's been good. But the regulations are definitely becoming a pain. And like I shared to you out in the hall there, you know, they're kind of backpedaling on the rules they're putting out, and it's, you know, not very clear because I got one email. It's like, oh, well, if you're the primary resident, you can Airbnb your spot.
Yeah.
But now zoning and planning is saying, well, since it's its own unit and you don't have access rather, through your house or portion of your dwelling, we're going to say that's its own unit.
That's unreal. Like, and look at the rules now. They're trying to encourage backyard suites,
Right.
and then the renovations of a secondary unit, all that stuff.
But why do you think anybody, and they got that program, we'll give you like $40,000, but you got to rent it at 85% of actual market value.
Yeah.
And like, if you got a parent or a family member that you're looking to have with you, like long term, like potentially forever, until they either move on or, not to get morbid, but like expire or pass away. Maybe that makes sense. But like,
we're in that. We're actually just got approved for that.
Did you?
Yeah. Now we have Maggie's mother lives with us.
Right.
It's the same idea. So we're going through the motions. Now we only have 3 or 4 months left once we had the approval.
Mm-hmm.
But you have to get accessibility, bathroom. There's some
Right.
things, the venting system.
Yeah,
Like,
I
it's
got
all-
an HRV in there, and I
Yeah.
don't even have one here. Mind you, we've done so many renovations. Everything's so much more efficient. I am having a bit, like the windows are getting a little wet.
Okay.
So I think I need to put one in the place now because
So-
this has all been done top to bottom, gutted to the studs, brand new, everything. And then we've done the bathroom upstairs. We did changed out the patio door, and everything's so much more efficient. Even when they took the windows out, they're like, holy moly, there's not much insulation around these windows. So
now,
there was some draft and like the moisture and stuff. It was still getting out. Like
Yeah.
it wasn't bad. Like it wasn't like it was just like you could feel the air, but like all those fixes like tightens everything up so much.
Oh, yeah,
Just
for
it's causing a bit of moisture problems, I guess.
Yeah.
And first noticed it in the ceiling in the bathroom, but we've done some fixes, replaced some insulation, and it's not so much an issue now because it's getting pretty cold, so like it's not as humid. But so you guys gonna pull the trigger on that, or
well, we hope so. Like, it's just we're trying to get some cost associated with what that looks like. We don't know yet. Like, but there's probably a good chance that we're gonna do it because, she's down there now. She does need a better accessible bathroom. I will say it that way. She's just in her 70s, so we need that. And then it allows us to do the other things in terms of the HVAC system. We got to do that, right? And, And what else? Oh, washer and dryer unit. It's not in there, type of thing. Little things like that.
Yeah, and that's the other thing for our unit. It's like we anticipated it being more short term. Now we're enjoying that there's more long term clients, like month, whatever, and that doesn't fit in that because it's 28 days or less.
Yeah.
So technically, I'm renting it on Airbnb, but it's more, we'll call it medium term.
Yeah. Yeah, that's right.
And I'm fine with that.
Yeah.
What I'm not fine with is like, well, you said one thing, and now you're telling me another one.
Yeah.
And it's like, and for the people that are looking to do these backyard suites, well, maybe they don't have a mother-in-law or a mother or a family member. Maybe they are looking to make a little money. Well, 85% of market value for rents, not really appetizing, takes you longer to pay back your investment.
Well, the cost of that to get it to where it needs to be, and then vice versa.
Well, that's it.
Right? Yeah.
And that 40,000, I made a post about it a while ago when they released that. That's a very minute portion of the overall cost. Like,
yeah, you'd know.
Yeah. We paid keep in mind we did the whole lower level. It was just around $90,000, and like on this side of things, we only moved this wall. Like this was a little den. Probably right to that window was where it finished. So we moved the wall up, made this like a full third bed because this is a baby split, 2 up,
1 down,
one and a den off the wreck,
Yeah.
half bath laundry. So now we got 2 full baths,
Okay.
3 bed. But I'd say probably this side was maybe 2025 tops. Like over on the other was like 65, 70K. But keep in mind, like we already had the structure.
Yeah.
But we had to build the tiny home inside of the house. So if you're doing a full backyard suite, you're looking at way more money.
Oh yeah.
So it's like, and if people are going to be looking at doing these things, well, they're not just doing it to plump some money into something and not get anything out of it. So like when we ran the numbers, we ran it on short-term rental income.
Yeah.
And I was like, if we can do this, we'll have our investment paid by here, and then it's all gravy.
Yeah, X amount of days over the course of a year.
Yeah. And now where they realize they're under the gun for the inventory shortage. And I was very upfront about that with them. I was like, listen, guys, like, I'm not happy that people don't have places to stay. This is bad. But you guys, the government, the city, you guys have known about this housing shortage for quite some time.
Oh, it's been there.
Well known.
Yeah, absolutely. I mean, it didn't happen overnight. Let's just face it, right?
Yeah. So my problem is, it's like, so you guys sat on this until it's too late. Now, instead of being proactive, you got to be reactive. And now it's like classic government. Well, it's your problem. So we're going to make you fix it for us.
Yeah. Well,
so
stay your ground on that for sure.
Yeah. So like, I didn't have the greatest call with the zoning and planning people. And now I'm going to have my lawyer send the city a letter because, you can't say one thing and then the other. Yeah. And you're jamming me up here. Like, we'll be all right. Like if I got a long-term rent it, I'm going to do it. I mean, I'm not going to let it empty.
Yeah, no, you can.
But at the same time, it's like, yeah, I feel bad. People are struggling. Everybody's struggling. Like, everything's expensive, but I don't feel that it's my responsibility to look out for anybody but, me and my family and what I want to do. And maybe that sounds whatever kind of way, but, I'm looking out for number one. And, if I had the ability to buy long-term units, I would, and I could contribute in that sense. But in terms of this project, that wasn't the case. But
yeah, that's right.
But anyway, I guess we got off a little tangent. But
good topic in itself. That you could spend a whole hour on that.
Oh man. But yeah, if you need some contacts, I got a couple guys that, I'm sure you're well connected too, but I know Rob Monk actually is really good at that stuff, does backyard suites. And another fella I met through a transaction there down on Tucker Lake. I bought my client into his father-in-law's place, and he specializes specifically in that. His name's Kirk. I got to look up his last name. Okay, but good fella, martial arts guy too. Yeah. So we kind of had he was at the inspection for the septic because they were trying to find where the covers were. It was kind of hidden under the patio, and the older fellow's not in a great way, so he had to come down and help. So, the martial arts thing, you kind of connect.
Bond.
It's like,
immediate bond.
Yeah. And, we got through that. So anyway, we got talking. He's like, yeah, you need anybody for this stuff. Okay. Like, that's what we do specific. Cool. So. But yeah, no, before I forget, I just wanted to welcome you on the show, Jack Cameron with The Way Home Mortgages. Yeah, with Premier.
Thanks for having me.
Yeah, I appreciate it. I know we kind of tried to get this going a little while back, and, life happens, and we kind of fell off, and now we're back at it. But
there's always busy times, but that's okay.
You got to make the time.
Yeah,
got to make the time. So, yeah, man, why don't we start off just... I guess the viewers, they know me, but maybe probably they don't know you, or maybe some do. Yeah. But give us a little background on you, where you're from. Have you always been in the Halifax area? Or
no, actually, I'm a Cape Bretoner from Sydney.
Okay, all right, on.
Yeah, I've lived up here.
One of the buys.
I have been Whitney Pier, if anybody knows that. Yeah.
All right, on.
Yeah, been living up here for early '80s, and prior to that. I've worked prior to the mortgage broker role, I worked with a bank for a long time, and then I transitioned here. I'm in my 21st year as a mortgage broker with Premier Mortgage, which is
amazing.
It's like a lifetime, right, at this point. So
yeah, and the big guy that was at your Christmas event, Don Vicker.
Yeah, Don's a caper as well. From Sydney. Yeah.
We had a good chat there. Yeah. We were down we were in the corner there, and I forget who was sitting across from him, but I think he was a good old Cape Breton boy too.
Yeah, Mike from First Canadian Title, I believe.
I think that's what it was.
Kennedy. Yeah. So lots of capers maybe move out, but there's still family back home. But they do kind of escape from the Cape Breton Island. So
are you one of those? Like I had friends, like they all live here, but man, any second they can get to go back and visit home, they're going.
Yeah, I do. I do get home fairly often. I'm going home on the 23rd. So
nice.
Just for the day. One of the family's birthday, so I'll pop down and just for the day, and I'll come back on the 24th. So quick.
Okay.
Now there's some special pizza down that way as well. So
right, yeah. What's the Acropole? No,
Napoli.
A Napoli. Yeah. Is that the brown sauce?
No, they don't have the brown sauce, but Kenny's is down that direction.
Okay.
Too, and it's always a battle who has the better pizza. But anyway, I grew up on Napoli, and that's when I'm going home to have a little bit of that. So.
Okay, cool. Yeah, I think my buddy, he's from New Glasgow. He is it Acropole?
Yeah. Now they have the brown sauce.
Yeah. He bragged that up all the time.
Yeah. So.
But yeah, man. So a lot of stuff shaking up in the mortgage world, the real estate world, and want to talk a little bit about it.
Yeah, it's wow, it's a big topic in itself. Like a lot of good things are happening, believe it or not. Like it's just trying to keep track of it. People say, well, let's put a schedule together to talk about these at some of the realtor presentations. But you know what happens? Every quarter things are changing, so it's important to kind of like to stay on top of it and speak about it often because it does change. And I guess just last week, the biggest changes is now that we're back to 30-year mortgages for first-time home buyers. That's a big win for the clients trying to get affordable housing. So we've been asking for that for many, many years. So first-time home buyers, they can now qualify up to 30 years. And if you're going through a separation or divorce, you can actually, if you haven't owned a home in the last 4 years, you can actually qualify for that program as well. That's
okay. So get a little relief if you're getting in a little bit of hot water, I guess. So.
Yeah.
How do you feel that that's going to play out for like, I know we'll get into maybe a little bit more of an overall outlook for 2025, but like, that's definitely given some more buying power to the first time buyers and the people that can access this new AM rate. How do you feel that's going to play out in terms of competition, price-wise for 2025? Do you see?
Yeah, I think it's good. It'll attract. That's a great question because how many more buyers will let into homes?
Right.
Because here's
that's
the piece.
Question.
Yeah. So here's the piece that's missing, is they still need the cash for the down payment. Right. There is the the Nova Scotia down payment assistance program. However, that there is some caps on the how much they can get.
It's $570, right?
$570 now, which that's a good change. They changed that many months back, but people still need some cash to get into the home. They need some closing costs. They need their down payment if they're not first time home buyers. So people do need 30, 40 grand, and with the debt loads that are out there and the cost of living, the ability to save is still a challenge.
Yeah, and that's probably the biggest thing people are running into is the inflation and the cost of things that exponentially have risen since, I hate to always bring it up, but the pandemic, it kind of really threw a wrench in things. Like it's really affordability across the board, just not housing, but like it's putting a little kink in the plans.
Gas in your car, utilities, food costs, all of those things are, and that's not going away. And I think people have to look at what they're spending on now. My wife and I, we do that fairly often. Actually, we kind of look at where we're spending our money, if we can save, how much subscriptions that people are paying on TVs, right?
You don't even realize till you get the bill at the end of the month.
Your phone, if you're paying for phone apps for your kids, like it adds up. So you can start looking at that. I've recently done a couple of clients, and we start looking at their banking accounts over the last 90 days. They're paying for things they don't even know. Right?
That's what they want. Right? That's what the companies want. Sure. And it's crazy, like all the streaming services, like, everybody get rid of your cable. Nobody wants cable, or, very few at least. Unless like my parents, like, they like to watch the news and, all the local stuff. And, one thing I miss, we don't have it. And I usually was a pretty good sports fan. I fell out of it. But, it's almost become a point that if you have all the streaming platforms, you might as well pay for cable.
Well, I swear.
And they're putting commercials back on.
You're right. You're paying for ads. You're like, it's just, if you actually, that's an enhanced service now. If if you're on Crave or Netflix or what's the other one, Prime and all those. Like, it's just, so when you start looking at that cost over month to month, and then listening apps, podcasts, whatever you're paying for, it certainly adds up. And so we're having those conversations with even seasoned clients or repeat first-time home buyers. How can we save money? The biggest change probably I've seen over the last 20 years, and over the last year more so, we are seeing more and more down payment from family gifts.
Yeah, it's very common now, isn't it?
That is a big thing. And so we're seeing a lot more down payment coming in from a family gift, and that's inheritance that that didn't happen before. So that's probably going to be the new norm for clients who can't save for that down payment, right? So,
yeah, the landscape's definitely tough. And I mean, when we bought our place, we didn't ask anybody for any money. Luckily, people probably be like, oh, damn him. But, you know, house we're sitting in here, bought in 2014, we paid $212.
Yeah.
You know?
Right.
I got a HELOC against the house, you know, just in case.
Yeah.
And we used a little bit of it. You know, it's all paid down or whatever, but for this renovation.
Yeah, sure.
You know, I called the bank, you know, RBC, where we had our bank, had our mortgage, and I was like, yeah, I want to put a HELOC on. She's like, oh, yeah, cool. What do you think the house worth? I was like, well, I'm a realtor, so let me just do a little report. I go, well, guy back behind me sold for like $457, and like, you know, I done way more improvements than he did.
Yeah.
And they punched it in the system. They're like, yep, $450.
Yeah.
No problem.
That alone, I mean, think about what since the pandemic, and a lot has changed with that. But I mean, the values of the properties, they're not going backwards. And the demand is still there. I mean, you see it every week of people getting in their car and trying to get that price point of $350, $450, which is very difficult to find right now.
You got to go, you know, and I feel for the people that want that price point, and they still want to be like, I had a couple clients kind of in and around that vicinity. They're like, yeah, well, we still want to be like Sackville furthest, or like, you know, 34, you know, not even 30 minutes out. And I'm like, guys, like, you know, we can keep looking, but the other problem is you see a nice property at that price point. Well, guess what? Every other person in your situation sees it too.
Absolutely. They're getting in their car, you know, one person's going to write an offer. Well, actually, several are going to write an offer. One gets accepted. That same crew gets disappointed. They get in their car and they go shopping on another one. It's like sheep. They're going one direction and the next direction to find that next deal, and maybe they're the lucky winner. I actually feel bad for them, but you know, until we get some, I don't know, affordable housing. What does that really mean? I guess.
Well, they're definitely not building affordable housing. Yeah. Like, you know, you see a lot of the cranes up. You know, let's be real. These developers, they aren't building cheap stock housing. It's all pretty luxury. And, you know, I don't know if you heard, but I heard some rumblings, like, you know, especially in the luxury apartment buildings, like there's been a bit of a lull there. Like they're having a hard time getting some rents, and the rents are coming down a smidge.
Yeah. I that wouldn't surprise me. I mean, again, affordability with that, even if I think it's what, $2,500 or $3,000, depending on that. Like that's a big chunk of your income.
I think the average is like $2,500 for a 2-bed or something crazy.
Isn't that something? I mean, now with the mortgage rates, you know, the fixed rates, and even to last week's Bank of Canada announcement, like
the 50-bit decrease.
That's, you know, we're getting there. We're not there yet in terms of where the market should be in terms of making it affordable. I mean, we're not going to see the ones and twos anymore.
I don't think so. We'll be right back to 2021.
Which is fine.
Yeah.
Which is fine. I mean, you know, again, when we still price that out on terms of mortgages of what they need to pay outside of the mortgage payment, and we always have that discussion. That's really important too. It's like, okay, the mortgage payment, taxes, heat. Well, what other debts? Like, you need a second car.
Yeah, at least one.
Right? Is there daycare? Is there, like, what other costs? And we try to, that's what we do on the broker side. Like, we kind of nail it down, not just mortgage payment. We kind of look at the whole picture, because if not,
because it all affects your debt to equity, right?
Well, it does,
debt
right?
servicing.
And we don't want the client to be in a financial strain position. So we kind of do a deeper dive and what's the future costs, you know. Maybe one's going on mat leave, right? What's that going to look like in a year of time?
Because you don't got the same money coming in unless you're lucky and your company tops you up.
Yeah.
But
or you know, they get in, they get excited. You'll appreciate this, and if they want a dog, well, or pets, like there's a cost that goes with that, right?
Man, my guy eats a $90 bag of dog food. Man, I think it's a couple of them a month.
Right.
And that's just one dog, and I got 2 decent sized. My wife's got them right now, so we can do this chat.
Yeah.
She brings them out for a walk. God love her. Every day off she got, I almost have a podcast, but the dog's got to get walks, so she loves doing it. But speaking of rates, like, you know, I know we just had the announcement. What's the best rate going on right now if you want a fixed, if you want a variable, and you know, what are you recommending to your clients right now in terms of, like, you know, because we know the rates are coming down, or at least, you know, they're telling us that.
Yeah. It appears that way. Right now, I mean, up until last week, we were doing fixed rates and
straight fixed
for 3, 4, 5 year term, and predominantly 3-year term, because people wanted the comfort level that, hey, the rates are going to be falling.
Right.
I want to get that in the next 3 years. Now, prime is pretty close to it, right? We're down to 545 prime minus your discount, which could be off of 1% off of that or more.
Right.
So now you're at 445. Now you have a choice to make, because I've got rate specials. To answer your question around the 5-year fix is like 444.
Oh, wow.
So now it's almost balanced, like a fixed rate versus a variable. Yeah, I mean, obviously there was massive rate increases on the variable over the last year there.
Which is very uncommon. Like, usually you win on the variable.
You do, yeah. Now, did we ever expect to sit here and have 9 increases or over? We never had that in 20 years.
Well,
so
especially federally, we were told it wouldn't happen.
Like, just payment shock for everybody forever. Like people probably didn't want to listen to the news because they didn't know what their mortgage payments were going to be looking like.
Yeah, I had some buddies, like one buddy, he didn't buy it with me, bought it before I got in the biz, but he was sweating.
Yeah.
A couple guys were sweating. Like, he's like, man, if that place isn't full,
yeah,
I'm hemorrhaging some money.
Yeah. Yeah, I've got a couple of rentals, and we were, because of the variable, it was costing us money to keep them there.
Right.
So now we're getting some of that relief. So yeah, so I know that pain, and but I am having that discussion this past week. I've probably moved some clients into the variable because I think that is the way to go right now, because it's only going to decrease over the next 12 to 18 months again further, right?
So you're pushing variable a bit harder now.
I am, in the sense I want them to have the choice, but I want them to understand there are risks.
Of course.
Right? But it may be the better win. Now, here's the catch. If they go variable, they can always move into a fixed when they want to do it. That's important to say, look, is it at a point that they're comfortable of moving into the fixed rate?
You can lock it in.
You can.
No penalties?
No penalties. For most of those lenders don't charge penalties to move into a fixed.
Now, let's just play devil's advocate, and you're on the other end of it. Let's just say I got a house with you, Jack, and you're like, hey, let's do the 3-year. The rates are coming down, and in 3 years, we can redo the deal and get you a better rate. But let's just say there's some massive dips before that 3 years comes up, and I'm like, hey, Jack, listen, like, the rates are way lower than we expected them to be by this time. Like, I kind of want to get out of this and maybe move to the variable. Like, what do people expect to have to pay in penalties? Like, I know it probably, lender to lenders are going to be a bit different, but what's the general rule there?
Oh, that, it really depends on, if it is the 3-year term, typically it's like 3 months interest.
Okay.
Each lender's a little different and how they calculate it. Now, if they were locked into a 5-year term, they could pay, quite a bit. Like, there's the interest rate differential, which is what banks always calculate their penalties on. So that's important. That's actually an important question to be asking. If people are out there getting pre-approvals or mortgages, they should be asking, what is the cost to break? The rate going in is one. The rate going out is totally different. And just because it looks pretty on the front end, it could be really bad on the back end of cost of getting out. So just because you're saving $20 a month here, that could cost you $10,000 and $20,000 on the back end. Wow. So it's really important to kind of understand how those penalties are calculated, and versus taking a variable rate mortgage or maybe a shorter term, to your point, because the longer the term, the higher the penalty, because if you break it halfway through, well, guess what? The banks always win. They want their interest.
Oh, yeah, they're getting it.
Right?
Yeah.
It's always the greater of. It's not the lesser of for the banks, right? So.
Yeah, they're going to get you for sure. They're going to get you on the penalty, and then they're still going to get theirs when you redo the, whether you're moving, whichever way you're moving to.
Yeah.
So. Yeah, man. It's important. I mean, before I was in the real estate business, we had we were with TD, and I can't remember exactly what the catalyst was that made us move. But anyway, we weren't super happy with a couple things, and I think we only had a couple years left on and we always traditionally, like I told you, my wife's very risk averse, so we always did the 5-year fixed. And we got out of it for a couple $1,000, but again, lower price point home at the time, not as monumental of figures that we're working with, because now you're working with an average price point of $575 for a home in HRM. So that 3 months interest is on a lot more money.
Yeah.
And then you factor in all the other differentials and stuff. And depending on how much longer you got left on your term, yeah, you could be paying it out.
You could be paying it. Now, the key thing is like, it's back to that discussion with the client at the beginning, because how long are they going to be there in the home? Because, if they did wanted to break their mortgage and move, like, what else is out there too, right? It's the inventory that's going to be available in our market. And now, unless they're moving for work or family or what have you. But in the local area, it's important to kind of like, what did we see happening in terms of, are they going to, the question I always get is like, is there a first time? People say, this is going to be your first home. Is it? Maybe it's a little longer now. Like, it's not going to be. Maybe because of there's less supply. Well, maybe they always, do you ever hear the expression starter home? Well, this is going to be your starter home. Well, may not be the case as much as it used to be anymore.
Well, things are so expensive that we're almost like, you're even lucky to get one.
Well, that's the problem.
Right? So yeah, like, I always say, nothing's forever, but man, I count myself pretty fortunate, me and my wife, that we bought when we did. And to be honest, when we bought this place, I thought I was going to be house poor then.
Yeah. Right.
So to be in the market and me and my wife do fairly well.
Mm-hmm.
I could, it makes me sweat, like thinking about like having to buy in this landscape, like and the prices of things. So I feel for people, and it's like you say, maybe it is forever.
Yeah. Well, it
depends person to person, but.
Well, the other thing, and you probably see this a little bit, is families coming together. Like, families are buying a big larger homes and much more expensive. But I see multi-families and the generations of, kids, parents moving in with them in order to making that.
There's a lot of that.
That's the bigger change as well. Outside the gifts, so parents are selling their homes, having that large chunks of cash, bringing it in with them, and moving in with their kids.
Yeah, whether it's like in the house itself, or they're doing the backyard suite or the nanny suite attached, or, I guess, we all have our loved ones and our parents and we love them, but it is also nice to have your own space, even if they are with you, right?
Yeah,
so.
No, absolutely. But, those are probably the two biggest changes in the marketplace in terms of the down payment or like families coming together, or buying some larger units, like 3 or 4 units. And, obviously that luxury is still there, where you can get away with 5% or 10% down on up to 4 units. So, having that other rental income would make a difference, right? To offset some of that cost per month.
Yeah, absolutely. It seems like every other client or person that I talk to about real estate, it's that situation. I'm working with people. We got a place under contract now, and it come up at inspection. They had a little wet bar downstairs. Oh yeah, this will work perfect. I, put my old man in the below grade bedroom. There's a nice little living area. Yeah. He could set up a little air fryer, induction, little double burner or whatever. And, he'd probably be, they're like, hey, he'd probably be eating upstairs with us anyway, because you don't really cook, but, he'd have enough stuff to do his own thing. They're not going to do the full conversion, but they're just thinking about their own space. And then on the flip side of things, yeah, I've seen, and you see it a lot from, people immigrating here too. And I think it's maybe more common, or maybe it's just, they know that they have to do it to make it work. There's a couple families buying one home.
Yeah, no, it's definitely, because of that demand on the lower price point is very high. Obviously, the larger the home, and the more down payments required, but the more space, more opportunity, and less buyers. Probably,
for sure, as you get up the scale.
Yeah, so seeing a little bit of that can be a little tricky depending where all the down payments coming from. But our job's to kind of, again, back to deeper dive on where all the money's coming from and the income, and make sure that still at the end of the day, if something happens, right, they don't want to be
floated,
right. So that's another thing we're always cautious of when we do these transactions.
Disagreements, somebody
can happen.
Something happens, and they're like, "Well, we're out. See ya."
Yeah.
And then how does that work?
Well, one's trying to buy one out. I mean, there is products available where you can refinance to pay out the other person. So
a lot more common. Like I see that in divorces and stuff. Like I got one guy wants to sell his place, but he's kind of, his wife's trying to buy him out, but he doesn't know or vice versa. Sorry. Yeah. He's trying to buy her out, but he's not sure if that's going to work. But then it's like, to your point, and the point I bring up to a lot of people that are looking to sell. It's like, well, where you want to go.
Well, that's another
And
challenge.
that's the biggest part. I think that's the most important part. Like you said, if you're not leaving the province or moving to somewhere more rural because of work or because of whatever life change is going on, you really have to have a pretty solid idea, potentially even like a target property or two that you're going to go at.
Yeah, you definitely, whether you're downsizing or upsizing, yeah, you have to have something in mind. You just can't do it blindly. You just can't throw it out there because, to your point, where you're going to go, right?
Yeah, and then, you start working with your agent and, maybe you got an offer on your house and you firm up on it and you got a couple months, maybe 1 month, and then you're scrambling trying to find somewhere. And next thing, if you don't, well, you're moving in with somebody or you're renting an Airbnb or, somewhere for more than you probably want. And that's just money going. Like, it's not really contributing to anything. It's that putting a roof over your head and having somewhere to be.
Yeah, and the other thing I think people forget about in those situations is that there's penalties could be on the mortgage. So if they don't kind of like plan that out accordingly, and you pay that big penalty on closing date, most of the mortgages are portable, like transfer to the new place. But if there's no new place, well, guess what? There's a full penalty, right?
Right.
Again, the bank wins, right? So
right. So if you're not sliding into a new property, you're paying penalties on the back end.
That's right. So it's if there's no game plan. Now we do try to do a good job with the clients to figure out if their current mortgage is portable, do a blended rate, all that stuff, right?
Yeah, and the other challenge I find, like especially if you're selling and you say whether you're upgrading or downgrading, even if you're downgrading, I bought this place, I'm upgrading the price.
Yeah.
So, it's challenging all around. And yeah, it's just, you really got to have a solid idea of where you want to be and a strategy really set in place. And the other challenges is if you're selling, a lot of people, it's like, well, I need the sale to get the new spot. So how many SOBPs are you finding coming through? Because that obviously in this landscape makes your offer, even though it might be best dollar value, it's still a bit weaker in my eyes because there's no guarantees you're going to sell your property in the amount of time you said, or maybe you priced it too high.
Great question. I think I'm seeing more of that. I will tell you, that's for the first time in a long time, like pre-COVID days, we hadn't seen that, but it's back. And I would say that it depends on where the property is located, number one, and how fast that particular home would sell on that market, and I guess, and also the realtor that's listing it. So I've had a couple of good successes of that recently. 3 examples where client, their realtors they were a great realtor. They got it listed very fast. They have to have the game plan to your point. It's like, all right, rate your offer. You have to have your home listed within the next, like you can't wait a month.
Or
like
fresh on the market.
It's got to be fresh. So, and, it's got to be, I don't know what the term you guys use, but set for the market. Like it's got to be ready to go. Like it can't be.
Yeah, it's got to be no issues. It's got to be priced accordingly.
Yeah.
Because the other thing is, like, I see people, it's like, oh, we're going to do SOBP, but then they want 50, 100,000 more than what the market can actually provide them.
Yeah.
And then, you're only getting, 30 days probably on your SOBP to get it done?
Usually, yeah.
If you're lucky, get a bit more, but they're trying to get that done inside of a month because the average days on market, I haven't looked. I should have had a peek before we had you on, but I think it's around 47 days. But keep in mind, that's all the overpriced properties and the below market price properties. And then, you put it on a curve and you get your average. So,
yeah, no, but I'm seeing more, and it's really about educating the client and having some conversations with the realtor to making sure, obviously the question is how fast can we pull out that condition of financing? Well, we do need a firm offer on their place. Like, we're not, I don't think we're in the position of waiving financing anymore. Like in terms of, that's not a good strategy for the client.
Terrible.
Right. So
you can get in a lot of trouble doing that.
Right. It's just people get caught. And I've seen an example of that in one of those 3 that I just spoke about, and he had to take some serious price drops that, it was well listed, probably above market where it needed to be. And we were like 10 days prior to close and we didn't have an offer. So that weekend he fire sailed it, and he got like 75 grand less, but he got an offer, and we had to do bridge financing, but he was stressed.
Yeah,
He was
stressful process as it is, as you know.
But he'd waived financing in order to get the new place, and I was like, probably not the best advice, because here we are now. He took a major haircut on that. Maybe it was priced too high in the beginning, but we brought it together. We closed it just like 2 weeks ago, and he's grateful for that. But he did take a haircut on that with the final price.
Yeah, shoot. Now, when I work with people and they're looking to do a swap, we'll call it, like either they want to upgrade or they want to downgrade, and inside of HRM. The cleanest way, obviously, is if you have the financial ability just to buy the new place, get approved. Mm-hmm. How much are you seeing of that? That's not very common in the landscape of, the prices. Few people, I've worked with some, they can do it. And sometimes, you correct me if I'm wrong, you might be able to say, well, we're going to rent the property, and you run the rental numbers, and then...
Yeah, I got a few clients like that, for the right client, that works. And those clients that are, as we talked about off air here, is like having investment properties it can be a good thing, and if you know how to operate it. So in this case here, I have clients that they're willing to do it and take that risk. I mean, there's a capital gains position that could take place in the end, and dealing with tenants and all that stuff. But at the same time, you're building a portfolio, you're paying down that investment. We just got to make sure the numbers work. I have I'm going to say a good size portfolio of clients that do that. But they're active in it, right? That it's not just maybe they're on their third or fourth. I have one of my clients that has like, I think he has like 8 or 9 properties. So, and I've worked with him from day one, and we've leveraged his property, his primary residence, and we made it work. And then so on, he's on, like I said, his 9th or 10th property now. And
wow.
So for him, he's got his day job, but we make sure the numbers work. And he did buy a couple through COVID period, so a little higher priced. And now there's a guy that went variable the whole time.
Oh man!
Right? But he was cool. Like he understood the risks. Like, so that's where you have to have, they understand the cost of carrying costs, right? And so he had multiple units, but some outperformed others. So in that case,
so you could float,
right? So if you just had one unit, maybe not so much. So that's where it gets a little tricky. So,
yeah, and I guess on to the next point. What about what's going on with the elimination of the stress test on mortgage transfers or switches?
Well, that's another great win. I mean, you probably saw that in the news where there was where the people were, they basically, think about that. If the stress test, that means the bank almost handcuffed you to their current provider. Like you could not move if you didn't qualify anywhere else.
Because what's the stress test? Another 2%?
2% above whatever the market rate is. Like if it's 4.45 and you're at 6.45. So now it's up for renewal. And for some reason, if you wanted to move to another bank and they had the stress test rate in there, well, if it didn't work, you have to stay with whatever the bank gives you.
Yeah.
So that they could actually give you a higher rate. You can't really, you don't have a whole lot of negotiation room.
Right. So
on the heels of the 30-year mortgage plan, that was another announcement that came out right at the same time, and that's well needed. I'm not really familiar with the competition laws of if it's up for renewal, you should have the right as a client to move wherever you want without the financial impact, right? So clients are now, I've heard some great things so far. We got a lot of clients that, maybe they're not happy with the service or their current provider. And so now they're able to move that over to a new lender, and no stress tests.
No stress tests.
None.
They're just slide you right in there.
Right. You're going to get best rate usually. A lot of rate specials. I mean, it's a really competitive. In our broker space, we represent 35 to 40 lenders. So with that, we've got a lot more choice for clients, right?
So before I get into the next question, I want to kind of lead with this, because not a lot of people know. And to be honest, before I got in the real estate business, I didn't really know either. I thought if you did under 20%, down payment, or sorry, I'm losing my train of thought. So right now, if you want to buy your house, you can put 5% down.
Yes.
But that's only on the first 500K. So can you explain to people, how that kind of moving scale works? So if it's under 500 and under, it's 5%.
5%.
But then if it's under $1 million, the next 500, say you're buying $1 million place, just for a sake of example.
Yeah, well, actually, the bigger change was you're spot on. It's basically up to $1.5 million. So basically, so it's 10% on the difference, to answer your question. Like, so for 5% on the first 500 and 10% on the difference. So whatever that final purchase price is.
Right. So up to $1 million. But
it was $1 million, but now it's $1.5 million.
And that's where I was going with it.
Yeah. So that
so
is
you can do an insured mortgage.
Yeah.
Without 20%.
That's right.
Up to 1.25 mil.
Up to 1.5.
1.5. Sorry.
1.5.
Why did I write 1.25? Oh, I'm dyslexic, I guess.
No. I'm pretty sure it's 1.5. We can check that after.
Yeah.
That is a big change. So think about people were listing their homes over $1 million, but they were making some of the offers that were coming in as $999,000.
Right, because they don't want to pay.
Right. So they didn't have the 20% down, and that's where the window changes for the down payment as well. At 1.5, you'd need the 20% down. And funny enough is that we're seeing offers. I just saw one the other day that home was listed at a much larger value, and now we're seeing the accepted offer at 1.49 or something, right?
Right.
Still getting insured pricing. Now that premium, the mortgage default premiums are still, they haven't changed. They have changed on the 30-year plan, but on the 25. So you're paying an insured mortgage. You get actually a better rate. But now the window is now moved to 1.5, which is better. It's, I think it's well needed in the marketplace, at least in Atlantic now. Ontario and Vancouver desperately needed it.
Because the affordability is right out the window there.
I think everything was up, but well over that. So there's still that'll open up some more buyers for their market, because again, people didn't have 20% down of $1 million, so now they get an insured mortgage now.
And do you think that's what was holding back? I mean, I know a lot of first timers, they're probably not buying $1 million plus home. Mm-hmm. And when you look at the average income of Haligonians or Nova Scotians, like, we're not really quite there. So would you say there's quite a small percentage? Like, would that be like the 1% of Halifax really getting into those $1 million plus price point homes? Because
I would say that. I mean, I'd be shocked that if somebody's going out to be buying that particular price point and coming to the table with 5% down.
Yeah.
Not that they don't want to have that big, beautiful home, but at the same time, there's a very large CMHC or the mortgage default premiums are pretty hefty that are going to get tied to that, added to the mortgage. But I think the income, to answer that, like, you would probably need at least $250 or even more for it to qualify. And that's just to qualify on the mortgage, not necessarily, if they got a car payment, student loans, what have you.
You mean like to cover the cost for $250,000?
Yeah, or it could be even more depending on the debt load and property taxes and so on. But for the other markets, probably a bigger win.
Yeah. Higher income.
Yeah. And now at least the option's there. I'll say it that way. And,
like, I don't think anybody's beating down the doors of $1 million plus homes here. Like, it's gonna give people more access, but I don't know how. I don't foresee a handful of my clients being like, "Oh, we're buying $1 million homes."
Yeah, my phone didn't ring drastically since last Friday because of that rule. Right?
Yeah, I mean, I'm fortunate. Fortunate for them too. More so, we're in a deal right now, and we're like, then they had the ability to slide into that with their guy, and they got the new AM, but it was like day one. It was just just happened that they popped up, and people I've been working with or known for a while, and all of a sudden they hopped right in, and it was they've both owned homes before, so they're not first time buyers, but also they do very, very well, and or they got good jobs. And they do well. So we're working through one right now, but it's definitely at that higher price point.
Yeah, I think the 30-year plan will be
Yeah, it was
probably,
in tandem too.
yeah,
So you get that
yeah.
because it's been 4 years.
Oh,
So for people that don't know, and correct me if I'm wrong, but if you sell your house and you don't own a home, I think it's 4 or 5 years you can reapply for
yeah,
to use your RSPs
yeah.
for your first time.
You can do that too. Yeah, so technically you're a new first-time home buyer if you haven't owned or occupied a home in the last 4 years.
Yeah.
So and then you can use your RSP plan again, and now that's changed. But that changed last early March. It was like, oh my heavens, it was probably like for 20 some odd years or even longer, it was like 25 grand. But now it's 60 grand
Right.
per applicant. So per person that hasn't used the RSP plan.
Yeah.
So
And then you still have that FHSA, first time home buyer savings account.
yeah, so that's another win.
And that's brand new. People can take advantage of that this year before the end, right?
Yeah, just earn some great basically tax-free money.
Yeah.
That wasn't around when I was buying, but
Yeah.
I've a lot of people are using that outside of their TFSA or RSP. So there's many avenues that they can kind of lock into or leverage. I think that's a FHSA or whatever it's called now.
First time home buyers saving account.
Yeah, I think more people should take advantage of that. Like really, like in terms of think about the RSP, you got to pay it back over
15 years, I think.
15 years. So, obviously you don't pay any tax of getting the money out, but neither do you on the other plan, right?
And what can you contribute? Is it based on income, how much you can contribute for the FHSA?
I think it's there's a cap every year.
Is it 8,000?
I think it's 8,000. Yeah. So, but that's
Look at me, I know stuff.
That's good. No, that's good. That's good. That's a great. If you could, obviously you're not going to get a tax receipt for that.
Yeah.
You can kind of, but this brings me to a good point. This time of year is a great. If you're not going to buy until later in of 2025, and you're sitting there with cash, dump it into an RSP or the savings plan that you talked about, because one, you're going to get a tax refund. So anybody that's sitting there with cash, I've done a few clients there last year, and they were they're building new construction, so they took their cash that they were going to be using for their home, dumped it in an RSP, they're going to get a tax refund. They're going to withdraw that money, all of it, when it comes time that they need it. It was like an 8-month build, and now they can use that for their down payment.
Yeah, so they got that little extra.
Yeah.
Then you just got to factor it back in, do your recontribution over 15 years, and you're not much options for not paying tax on much of anything these days.
That's right, yeah. We got a little break here for 2 months, but not much.
Yeah. And I mean, it's kind of a bit of a slap in the face, to be honest. But, I guess we'll take what we can get. Like,
that's right.
That's what we're going to do. But, I know you're a busy guy, but last kind of point I had here is, do you have kind of, with your Premier and your lenders, have you guys had any, I know we were supposed to have a little economic outlook in the House of Commons, and that didn't go. A little bit of trouble there.
Yeah, a little bit of problems going on that side of the fence.
Finance minister and housing minister out. But anyway, I don't know if we want to get to touch too much of that. But do you guys have a sense of, how things are playing out? Or they, what are they saying out there in terms of outlook for 2025?
Yeah, I mean, obviously the economists don't want to be wrong, so they're super conservative, right?
Very, fake.
I do believe that, out of all the Zoom calls and the conferences that I've attended, it's going to be a positive outlook in terms of the market. So, bearing that there's no major disasters,
wars, catastrophes.
We obviously will have, the south of the border does cause some problems with the rates as well, but
for sure.
We'll have to, we have to look at it. Canada is very strong overall in terms of our housing market. I will say it that way. If you look at the straight across the board, there's not a lot of decreases in the overall values. Some are stable. Now with these enhancements that they're making within the marketplace of the changes that they've done. The other thing we didn't talk about today, but maybe we'll do this another time. There's more data to come on it. It's just this refinances for people that own their home, and you can build a suite within your primary residence.
Right.
So you can actually go back up to 90% of your home value.
Oh.
and then you can use that money for a secondary residence. So I don't have a lot of material on that yet. There's still, they announced this, but didn't really kind of discuss it with the banks.
Yeah.
Right. So
I find there's a little bit of that going on. It's
so
we got this for you, but
yeah,
details to come.
That's right. So that will be another exciting plan. The rates will expect it to come down. I think, fixed will come down a little bit more yet, making it a bit more attractive. And then our variable, again, the rumor has it could be 0.75 off the rate again, upwards of another 1.5, right? So we'll see where that takes us. That'll bring those people that run variable a lot more manageable, I guess, is probably the word I'll use. The other thing is, like I said, when we started off, this is really kind of looking at people's costs. Like, where can they cut costs in terms of, businesses do it all the time. People run.
I'm a product of that.
Right? See?
Unfortunately.
Yeah.
They're like, who's this guy in Atlantic? We're paying all this money. Move that position to Toronto and stack it on somebody else's desk and probably didn't pay him anymore.
Right?
Poor buggers.
So it's kind of looking at, looking inside your, I don't want to say, hey, you're running a business within your house, but you technically are.
It's a business.
It's your partnership or your wife, whatever your arrangement is. You got to look at what you're spending in house and saving on food costs, and looking at your banking fees and bank account fees, all the way to your utility costs, and how can you save, and maybe some home improvements that can actually, we talked about that at the beginning, and investing in your own home. Mm-hmm. So so that is it. That's kind of where I think 2025. I think there's some more products that will be coming down the pipe with the lenders, some flexibility of the terms. I don't know if we'll see a whole lot of change to the stress test. Overall, we got this one now for switches. That's great. That's a great win. So we'll see. I think it's a lot of positive outlook, though, in terms of the lenders.
Yeah, man, I think if anything, it's definitely a more positive outlook than we've had in a long time. I think there's a lot of good products out there, like you said. I think it's going to give a little bit more buying power back to the consumer out there, especially in the first-time buyers, and even upwards of people looking to upgrade or buy more pricier, more expensive homes. And it's just a matter of if we can keep up with the inventory so we don't get into a jam where we got so much demand and not enough supply out there that we, I don't know if we'll get back to the craziness of the pandemic, but I think we're in for a pretty competitive 2025 for sure. So.
Well, I'm sticking around for that. I mean, I've got a young mortgage team, and they're all hungry. In terms of trying to get their business models going, and I think I'm looking forward to it actually, and it'll be good. I'm really excited to see what some of the newer products for clients. I mean, we didn't get into them all today with cashbacks and Nova Scotia down payment plans, but it's getting the advice. If I leave on this note that it's getting some proper advice and education around that. It's not just go online and pick a rate.
No,
well, you need to be talking to the right people, and get some real estate advice and mortgage advice. It's just more. It's more than that, right? This is a big purchase. People spend more time negotiating their cell bills or cell phone.
I know,
right? Than they actually do their homes.
It's
right?
crazy.
So
yeah, they're so nonchalantly, but yeah, man, we could do another episode on all that other stuff. But I know you're a busy fella, and I got a client call to get ready for as well. So we'll release you back out to the jungle, and we'll see you out there.
Thanks for having me on the day.
Thanks, Jack.
All right.
Appreciate it.
Thanks.